Welcome back to Next Gen Investing. It's time for Under 30. Fun little theme here today with these quantum stocks on the minds of at least one analyst. And George Tsilis is here to break that down. George Tsilis, of course, a senior markets correspondent for the Schwab Network. You know him well. GT, how's it going? Happy Wednesday, holiday week. Quantum computing, though, it's something that's seemingly not going away anytime soon, although it looks like Cantor Fitzgerald initiating coverage on several of these names. Doesn't have a buy rating on all of them, so see some winners, maybe some ones to be a little bit more hesitant about. What did you see here?
Well, I think, look, obviously there's a big movement towards quantum computing, which is, of course, much faster than your classical computing. There's the evolving technology associated with it, and there are major players that are already in this space that don't have it as their core business, but part of the R&D, and that's like companies like IBM and Google. For what it's worth, there are small players like Rigetti, which is essentially a builder of supercomputers and quantum processors, and it's proprietary in nature. These are companies that are generating a lot of money right now in terms of capital investments from institutional shareholders, private placement, and equity holders, because they're getting a lot of federal grants for development and research purposes. And so I think this is, again, an interesting area that is a complement to what's going on in the artificial intelligence space, autonomous driving, robotics, crypto, for instance. So quantum computing is just a natural other additional technology to speed up the processing power than classical computing has given us so far. But Cantor's constructively bullish on this one. They've got a $15 price target on this name. They did, of course, move it to an overweight rating as well. And I think it comes down to the manifestation of revenues. And revenues are important for any company. And, we talked about some of these companies in the quantum space that don't have any revenues and don't have any revenue estimates going forward. And that's not the case for Rigetti. So I do see why there's analyst coverage on this name, because based on the trailing revenues, they were $9 million worth last year. They are expecting around the same this year, around 8.9 to 9 million. But going into next year in 2026, that number is more than double, around $22 million. So for what it's worth, this is a company that's expected to double its sales between this year and next. And that may be coming from additional partnerships, royalties, or, if you will, patent licensing agreements with the major companies. But I do think this is still an interesting space, and it's one that's really, caught a lot off guard, considering, looking at Rigetti itself as a company. The stock was trading at sub $1 level last year. So this stock is over 10x in the last year. And even though it's pulled back from its all-time highs, or at least last year, which is around $22, it's still up about 1,200% in the last year.
Okay, when comparing to then the rest of this space, George, because it's not necessarily at this point, I mean, like all of these names created equal, even though they tend to trade somewhat in tandem. Like we got news from IonQ. They're really seeing developments right now in Texas as far as legislation being passed for continuous build of quantum. So, I mean, what else do you watch outside of Rigetti today? Because this note obviously is the broader space. Sure. What's working, what's not within quantum?
Well, I think, across the board, there are so many companies right now, it's hard to keep track of them. But there are many names, and some of the names we've talked about, and I brought this up, is they don't have any revenues. So for what that's worth, I think you're going to find those companies are going to, manifest into additional equity offerings, dilution. But they can also provide great beta, if you will, from the standpoint of moving higher quickly versus on the opposite side, moving down quickly. I think Rigetti itself, it's very volatile, so you have to be mindful of that. The company's, like I said, generating around 9 million in sales last year, but they lost in terms of net losses around 140 million. They have cash around 209 million. So for what that's worth, that's about a year and a half's worth, roughly speaking, of cash to burn. You have to consider dilution risks, but I do suggest that legislation is very important, because if these companies are getting federal allocations, grant money, that can certainly offset any needs for revenues, at least maybe in the next year or two. So I do think that's important that if you look at these companies projections wise, go about 1 to 1.5 years out. So if you see sales growth improving about 1.5 years out, which I mentioned here for Rigetti, it's improving by double in 2026. These are based on the estimates. And that gives you something to go off of. But other than that, you have to consider there's still a lot of risks. There's still a lot of opportunities because this whole ecosystem of stocks and technologies are still evolving. And we've seen the evolution of companies that really haven't generated much revenue, if any, continue to move higher. We talked about Archer and Joby. These are those EV electric vehicle takeoff and landing companies. They've done very well, and they're starting to generate sales this year.
Yeah, and this will be an exciting space to watch, as I do think it ties very much into some of the AI and just enthusiasm regarding advanced technology and where we'll see things shift just in the next several years. So appreciate that great breakdown on overall the quantum stocks, George.